Hey everyone, just a quick intraday update on markets. We have to talk about this. I don't want to wait till 4:30. I think people need perspective and direction now. What's happening with the stock market? What's happening with the economy? What do these tariffs mean? What do they mean to you? What's the point? Is it still a negotiating tactic, or are we really going to let the economy go into the crapper? That's really what you want to know. And that's what we're going to talk about. I want to talk to you about what you could do, what you should do. Every investor is different. And I really don't like all the blanket advice that's going around from buy the dip to sell everything. I mean, it's all over the place. And I think it's making people a little anxiety ridden or a little batty. So let's talk about these things. And I'm going to roll a quick intro. If you have any questions, ask me in the comments, whether if you're watching this in live or the replay. If you like what you're hearing, if you like the way this presentation goes, give it a thumbs up, please, and it'll let your other people in your crew know about the work we're doing. This is not salesy. We don't get into that. This is all educational. I'm just calling balls and strikes and giving it to you straight. I'm a financial advisor with over 35 years, and I'm with the wealth management firm Client First Strategy. So pay attention. I'm going to show you some important things to look at, and then you're going to have, I think, the perspective to get through a pretty difficult time in the market. Here we go. All right, right now we're seeing the one of the worst days of the stock market since the pandemic. In fact, I would say this is the worst day since those crazy days in the early onset of the pandemic. Remember, we're having all those tough days in the stock market, and not just stocks, but assets like energy and gold were big movers as well. The bond market was a big mover. And back then, the worry was the economy could come grinding to a screeching halt, and that is the worry right now. Is it justified? Let's just take a quick gander at how the market's doing. The market's actually back. I see a like already out there. Thank you very much. I really appreciate that. Maddie's out there. Thank you, my friend. So, the Dow is down 1,281 points. It was down over 1,500 points. So we're close to a 300-point bounce, if you want to call it that. It is not even we're just about halfway through the trading day. So I'm not going to call it what's the market going to do by the end of the day. It could bounce, it could go down more. I think people are shocked, and I think people are feeling that the tariffs, whatever you thought was the worst case scenario, it's like way worse than even the most pessimistic forecasts were. So you see Nasdaq down almost 5%, S&P down almost 4%. You can't directly invest into a index, but you could invest into a security that tracks your mimics index. I have to say that. Oil down 5. Now you might think, well, that's good. The price of oil is down, so that means gas can come down. So this is great. No. First of all, OPEC announced that they're going to up production a little bit, which could have a little impact, maybe $1 a barrel for oil. But oil is plunging now over 7%. Okay, see that's over 7%. Let me move my cursor over here. See that? Oil's down over 7% on the day. That is because of worries of demand destruction. We're not going to need as much oil if the whole world is going to go into a recession. The VIX is 27. It was a little higher before, but that is almost that's almost an indication of extreme fear. You'd have to see that really get to like 40, 45, like an extreme fear point. We did it 30, but not quite enough to put us over the edge. To understand the tariffs, you have to understand how this all started. So I'm going to give you a little bit of background, okay? I've been in the business for 35 years. I'm 57, almost 58, so I've seen a lot now. And living here in New York State, Long Island, it's a good microcosm in a way for the rest of the country. And I'll explain this the best I can. A friend of mine put it to me best, who grew up in upstate New York. He lives on Long Island now. And the way he explained it to me is, Mitch, when I grew up, everyone had a job, and there were factories all over the place. There was GE, there was Eastman Kodak, uh, IBM. There were factories here. We had big factories, and this is all over the country. But I'm just talking about my friend's story. And one by one, these things started to close. And the town that I grew up in, there's maybe 25% of the people in the town who are left. And this has been horrible for jobs, and people are miserable. People's real estate plunged in value, never came back. People got laid off at really bad times in their lives. People had no place to go. They had to work far away from their family and uproot their family for employment, and going to a new place for employment, which might also be unstable. This has been going on for 40 years, but it really accelerated with NAFTA. Now, I'm a free trader, and from my perspective, and I want you to understand, from my perspective, NAFTA has been a good thing. I've had low inflation. My job has been really good. The market's been really good over the years. And I don't have much to complain about. But the people who are complaining about the tariffs are the people who have something to lose. And that is the people who've gained, who've benefited since NAFTA. And who is that? That's people who um, own assets, people who own stocks, people who own real estate, people who are college educated. Am I starting to paint a picture here of why people have benefited and other people have not benefited from the economy in the last 30, 40 years? Wages have lagged inflation for all these years. So if you're somebody who just lives on wages, you've lagged, you've suffered. Your standard of living has progressively gotten a little worse every year. And you're probably the first generation to live at a lower standard of living than maybe your parents, right? This is basically what has brought Trump to power. And this is how he's in this position to put through the tariffs. He believes in it. You have to respect people's feelings and understand what the other side is thinking. And I hate to say the other side, we're all Americans, but I want you to know where this anger and deep-seated belief in tariffs, I want you to know where it comes from. That it's people are angry, and I think it's underestimated. This is why blue-collar workers and unions were so pro-Democrats, and they've switched to. I'm trying to say this as politically correct as possible. They've switched to not just the Republican Party, but they've switched to back up the MAGA movement. All right, you have to understand it. I'm setting the table for you so you can understand how this could happen and how so many people could be behind it. If you watched President Trump's speech yesterday at the Rose Garden, you had an auto worker come up there and praise President Trump, and you had a group of auto workers screaming and shouting. You have to understand, people have not benefited from the growth of the economy, and it hasn't been a all boats lifted economy. If you improve the economy, it gets better for everybody. It hasn't worked out that way. And some of you might be disappointed to hear me say that. Some of you are cheering me on to say that. I'm not trying to take sides here. I'm giving you the realistic view of how we got here. So I just want to put the tariffs in perspective of why people are pro this tariff policy. We've been getting screwed, and I can prove to you that I got screwed because my job went away. The factory that I worked at went away. If there is a factory, I have to work weird hours or take less money or put up with conditions that I don't love or work far from my family just because I'm afraid of losing my job. I can't even get another job. This is where we are. And by the way, for NAFTA, people who are, a lot of blue collar workers were mad at NAFTA, and that was passed by President Clinton. And a lot of jobs did go away from that. I'm not saying the U.S. economy didn't get stronger and bigger. Overall, America got a lot richer from it. But the people who got richer was a lot more than everybody else. So no way were these people going to vote for Hillary Clinton when her husband put through NAFTA. That's just the way I see it. And this is long memories, and this is how politics could work, right? It's anger that propelled Trump to power. It's if I was him, I would do the same thing because it works if you want the power. That's I'm not trying to be pro or against anyone here because you know my feelings on all this stuff. Okay, I definitely well okay anyway. So Trump touted the 1880s and early 1900s in his speech. Keep in mind, and tariffs paid for the government. Keep in mind the government was a tiny, tiny portion of the economy compared to what it is today. The government had to get bigger because after the Great Depression, the government had to step in and feed people and save banks from going out of business. Because if you put your money in a bank and the bank went out of business, you lost all your money. That doesn't happen anymore today. Think how safe the banking system is today. That was before we had interstate highway system. That was before we had the USDA, before we had the FDA. That was before we had jets in the Air Force. Okay. That was before we had the jets in New York. I mean, think about that. So we the government is a bigger portion because we have more, and our quality of life, our standard of living, and our place in the world has ascended. Now, I understand the argument, government spending. Okay, you see if you're I'm going to say if you're on the right, government spending there's no such thing as government spending. It's taxpayer spending. There's no government funded. It's taxpayer funded. If you're on the left, it's government funding. So it's a real dichotomy, and I think people need to understand this. And I'm putting it into like the simplest terms I could possibly come up with to really get this point across. Because you hear these people on TV and the economists and the Wall Street strategists, and I think a lot of people hear these guys speak, but it sounds more like they're speaking to each other than they're speaking to you and I, the viewers. Okay. So we had the stock market crash of 1929, Black Monday of 1929. And in 1930, we put through, because we were getting some money from tariffs, it was really good. So the Smoot-Hawley tariff came around, and that put blanket tariffs on roughly 20%. But it raised the average import tax on foreign goods to 40%. It added 20% to the United States' already high import duties on foreign agriculture products, manufactured goods, and then they raised it even more. And it didn't create more tariff money for the United States. What it did is it just created less trade for the entire world. The whole world suffered. And that's the blueprint. Now, you remember Fed Chairman Ben Bernanke, how he helped get us through the Great Recession, and he was worried about deflation, and it just completely changed the role of the Fed in the economy because the Fed had to play a much bigger role in the economy to save the economy. The economy was really going down the toilet when Lehman Brothers blew up. I don't think people really understood how bad it would have been without the intervention of the Federal Reserve and the Treasury Department. People look back and go, it wasn't that bad. We got through it. We didn't need the Fed or the Treasury. If we didn't have those, I just don't think you realize we'd still be in that time frame if it wasn't for the bailouts. Okay, good, bad, or indifferent, that was necessary. That was an emergency. Ben Bernanke, he was a student of the Great Depression. And he understood how tariffs work because first they cause inflation because you're getting more money coming in. But as consumers and businesses, I'm both. I'm a business owner and a consumer. When prices go up on certain things, it means we cut back on other things. If you're going to pay $5,000 more for a car now, for example, maybe it means you're going to spend $5,000 less on other goods and services. But everything is going up in price. This just accelerates it. That happens until you get demand destruction when you start buying less goods, less services. And then maybe the tariffs are still there, but our U.S. Treasury isn't collecting that tariff money anymore because it's just fewer goods and services that are being purchased. So eventually we get to a new equilibrium. Like yesterday, the word of the day was reciprocal, like reciprocal tariffs. What we're going to have for a new word, I think, is equilibrium. And that equilibrium is going to be lower than where it is today. So less trade, less business, less money moving around, less loans being made, less demand for loans. Banks become more stringent in who they make loans to. Because right now, banks are worried about a recession. If that's the case, banks are going to be very, very careful about who they offer a mortgage to. The standards are already pretty high to get a mortgage, but they're going to get even worse. So we're going to talk about that in a couple of moments. Okay, so moving on. So tariffs don't mean more money; it means less money for all trading partners. It means less trade. So the tariffs. So let's take it to today. The tariffs are all over the place, depending on a country's tariffs on the United States. We, according to President Trump, are going to hit back with just 50% of the tariff they're charging us. Now, I'll put this in the comments when I'm done with this live stream. All right. The tariffs that are being said that other countries are charging us are actually, I don't think, are the tariffs. They're just simply, if a trade deficit is $100 billion with a foreign country, you divide that number by what we're taking in, that's 40%. So we're buying 40% more than they're buying from us. That means it's a 40% tariff. That's not a tariff. That's how the administration is calculating them. That is a trade imbalance for sure, but that's not a tariff. It makes sense that most countries will have a surplus with us and a deficit with them because we're a bigger economy. We're like 6 times the size of we're 6 times the size of China, and China is bigger by 50% than Japan and Germany, not combined, but each one. I think they're like $4 trillion economies. China's like a $6 trillion economy. All right, so we're much bigger than they are. So it makes sense that the wealthier, bigger nation is going to be buying more stuff, and us as Americans, we buy a lot of crap, right? That's why we have fast fashion in this country. We have fast food options up the wazoo. So, having said that, that doesn't mean that if there's a 50% ratio of, let's say, we sell China $50 billion as an example, but we buy $100 billion from them. That means there's a 50% ratio if you do the math, right? 100 divided by 50 is 2. So it's you see the ratio there, right? So, but that doesn't mean it's a tariff. It just means we buy more stuff from them. Making their stuff more expensive is just going to mean we pay more for their goods and they'll sell us less. It hurts everybody. That's not including if there's any retaliatory tariffs. So I don't really see how the calculations of the tariffs make sense. If you wanted to do tariffs, keep in mind that this is the problem. It takes years for corporations to change, for the economy to change. The stock being bandied about today that's getting absolutely creamed in the market is Nike. They make sneakers in Vietnam. How long does it take for them to convert their production to the United States? And if they do convert production to the United States and a new president comes in and gets rid of the tariffs or lowers the tariffs, then Nike is left with like a very high cost production center in the United States that becomes a dead weight to them, and they have to start producing elsewhere in the world. Because if they don't produce for cheaper, their competitors will. So it's always a race to the bottom to manufacture things for cheaper, because we as businesses and consumers, we gravitate toward buying the best deal, right? We want to get the cheap. You and I want to get the same sneakers, fine. But if a company's selling them for $80 and another company's selling them for $50, you and I want to spend $50. We don't want to spend $80. All right. Our patriotism is not going to carry us to spend that much more on a product. We want to spend the 50. That's how a free economy, free markets work. Yeah, so that it's going to take years. You think about all the stuff that American companies and foreign companies make. It's not going to happen in 30 or 60 days that they're just going to come here, plant a flag in the ground, and build a factory, overnight. This takes years. And all these companies that you hear about building factories in the United States, like Taiwan Semiconductor, which, by the way, is using money from the CHIPS Act from the Biden administration. they were going to do that anyway because they're getting the money for it. But now a lot of other companies are doing this stuff. They're saying they're going to build here. They're going to study it. They're going to make sure it's right. They're going to take a couple years to do it, and they're taking their time. They're slow walking it because they want to see if there's a change in tariff policy. Tariff policies are not in the Constitution. These are at the whim and the pleasure of the president. So even President Trump could change his mind and get rid of the policies. But as it stands now, to make these changes for corporations to move production here, it takes years. And if we are going to go through that process, I don't think a recession is strong enough a word. I think it's a depression or close to it. That's how bad I think it could be. I don't think anyone wants it to get that bad. And I don't think anyone wants it to get that bad, and certainly not Trump. Nobody wants it that bad. If people say Trump must hate the economy, he wants to kill the economy. I am still hopeful that this is a negotiating tactic. And let's say he puts a 60% tariff on Vietnam, and now Vietnam comes back and says, we want to play ball. We're going to get rid of our tariffs. And then right away, it'll be announced to the public. Trump will have a press conference. We are eliminating our tariffs with Vietnam. Everything's cool. And he's and he's going to tout that as a model for other countries to follow. And he's going to really drill it. And now we have a good trading relationship. Who's next? And slowly but surely, different countries will start to fall in line, lower their tariffs to get our tariffs taken off of them. And that is the key. Is it possible to have negotiated all this stuff? I don't know. It's too many countries to negotiate with at once. There's tariffs being put on over 160 countries, the entire world. It takes time to negotiate. Countries, they hem and they haw, and they want this, they want that. And then it finally, you get to a negotiation, a settlement. This way could be much more painful, but it could be much faster. And I think that's what the goal is of the Trump administration, of the Trump tariffs. I don't think these tariffs stay in place like this. I think if they stay in place like this, worst case scenario is it truly plunges the economy, sharply negative GDP, huge layoffs, just massive amounts of layoffs. No one gets any debt. No one could borrow. Banks go under because everybody's going to be defaulting on mortgages and car loans and things like that. It'll be so bad. I mean, you forget the stock market. You won't. I'd worry about my money in the bank. That's how bad it would get if things are left as they were announced last night. No one, I think, wants it to get that bad, and I think cooler heads will prevail. But everyone has to get kicked in the head before their heads get cooler, I guess. And that's what the administration is betting on. That's what Howard Lutnick said. Howard Lutnick said that on CNBC today. He said, I think countries are going to start to fall in line, and as they do, we will back off. We will back off on these tariffs, and we'll start to see these crazy tariffs go away, and we'll have a better trading deal, for the United States. That's the key. All right. So what do you do as an investor? First of all, no hasty decisions, please. Okay? Everyone is different. So there's no I think you should be buying here. You should buy the dip. I think you should sell. I think you should sit back. It depends. It depends on how old you are and what your time horizon is until you need the funds. Personally, I invested in my company retirement plan. I'm not changing that. I'm not changing the mutual funds that are in it. I'm just simply going to keep investing every month. The market comes down. I'm finally able to dollar cost average at lower prices. And, I'm looking out 20 years, 30 years. I'm not a short-term investor. If you are aggressive and you want to take a stab at something, take a shot, buy a stock now that you think you could get a good bounce in. Listen, as long as you recognize the risks and you're an adult, you could do that. Maybe just a little bit, part of your money. It doesn't mean that you're doing that with all your money. Oh, you can't trade. Listen, you might have a lot of money invested, but you want to trade a little bit just because you think it's fun, or you want to try to catch a winner, quick winner. There's nothing wrong with it. If you have a gambling problem, that's a different story, and I highly urge you not to do anything and get some help, because we know that eventually trading is gambling. The difference between investing and gambling, by the way, if you want to know, the longer term you invest, the higher your odds are of winning. In gambling, the longer term you gamble, the lower your odds are of winning. Okay. That's the difference. So people say, "Oh, it's all a gamble." Oh, no, no, investing is not a gamble. There is a difference. And the difference, the difference is how much time you're willing to give it. If you're 40, 50, I don't think this market is something you should worry too much about. There's other things to worry about. Your business might be affected, your job might be affected, but the stock market, I'm confident, will recover. If you're 65, for example, and you're retiring in a few years, you should already have some of your money allocated into something more stable because you follow a glide path. As the older you get, the closer you get to needing your money to pay your expenses. The sooner that as that happens, you start moving your money into more stable assets out of volatile assets like stocks. So these are the things that we talk about. That's what you should do for job stability. Look, I've said this before. This is kind of outside the bounds of investing, but you should, the last couple of years, you should have, but I hate to say I told you so, but if you can, get a new certification. Take a course in artificial intelligence. All right. Figure out what the next step is or the next big need is in your industry or another industry and attain that certification, attain that knowledge, that skill, because we're going to have to be more flexible in our job outlook, and we're going to have to be more flexible in the kind of jobs we take. Because sometimes it's not a matter of the job you want; it's a matter of just getting the job that's available at the time, and you want to make sure you're competitive to get that job. All right, so these are the things that I wanted to focus on. I think cooler heads will prevail. I think eventually countries and regions will start to come out and say, well, if we lower this, will you lower that? But I think right now the negotiation, according to the Trump plan, is you have to just start the pain now and then do things to relieve the pain, as opposed to saying leave things alone and let's see if we could, negotiate something that's going to be a very painstaking process and take a long time. That is what I'm thinking, subject to change. If you have any questions, hit me up in the comments. I appreciate so much that you took the time to watch this. And just one last thing. I know it's going on a lot longer than I thought, but if manufacturing jobs do come here in the United States, I do expect them to be a lot of robotics, a lot of automation. I don't think this necessarily means that humans are going to get more jobs. Only about 8% of Americans work in a manufacturing capacity. I think less than 1% of Americans, like a 0.5% or less, work in farming. So automation is just going to continue to spread. I remember in New York when the minimum wage was announced that it was going to go up to $16.50 an hour. All of a sudden, you walk into a McDonald's or a Burger King or a Wendy's, and now they have kiosks. You touch the touch screen to order everything. Why? Because it's replacing the people who are making more money. That's not going to change, and every corporation wants to do more with less. So when they say less, they mean less people, especially in a service business where labor is always your biggest cost. All right, guys, I'll be back today at around 4:30, 5 o'clock with my evening live stream. Thanks so much for watching.